Good evening, all. Ira Epstein with your Metal Market Wrap-Up, and this wrap-up is for the evening of Wednesday, the 22nd of June, 2022, about 7 p.m. Central Time. You know, I keep looking at these markets, and this whole inflation scenario, as the press keeps playing how strong it is, in the commodity markets, market upon market, are saying that we have peaked in the inflation. Now, that doesn't mean that the markets can't stay strong and stay above $110 or thereabouts in Brent, or $103, $104 in crude. I see it, over that number. But if you're taking a look at cotton, look at how much it's fallen. Are you paying any attention to grains, how much they've given up? Today, by way of example, Goldman Sachs came out and they have revised down where they think the grain prices will be now for the next quarter. And they're seeing, I'm convinced of it, they're seeing what I am, these markets have made their peaks. Can grains go back up and catch on fire? Sure, if something happens to supply, not demand. Demand's not going to change if this market goes higher. This is going to be a supply issue. Would be weather. Don't know if that'll be. But what's going to make these markets in the metals, because that's where we're at, come alive? Well, I don't think it's going to be supply. It's the flip-flop. It's got to come out of demand. Why? We have plenty of supply. I'll give you an example. Copper market tonight in Chile. 50,000 workers in copper mines are threatening to go out on strike right now. Does this look to you like that's the case for copper? Go read the news. You will see what I'm talking about. This is not a small issue, and yet copper's not even lifting itself. When I see markets don't respond to bullish items, you've got to get more in the bear camp. Copper is known as Dr. Copper. It tells you what world demand for industrial goods are. They are falling. Even a threat to supply is not lifting that market. When we come to the gold and we look at the weekly chart of gold, now for the week, you're pretty flat. You're down 0.7, $1.30. When you look at this chart, you had an outside day to the downside today. The market's not giving you much follow through at this point, but that's the pattern. You created in the process lower highs, lower lows on the swing line. So you'd have to get over 1850.30. to say, the first trap for the bears in the market, and maybe it won't drift down to the lower Bollinger Band. Show you that now. The 18 and the 200-day average keep crisscrossing each other. Do you see the gray line right here? And the 18, that's indicative of a market that's trying to figure out, what do I do next? This is one very ugly chart pattern. You haven't gone anywhere. Not really. For a long time, since back in May, a month ago. Actually, it was even more than that. It was about mid-May, and this market just died away. You want to know when the end of this market happened? This was the war event, Ukraine. The washout continued on until here in early May, and since then, you just went dead in the water. And that would be what I label that, dead in the water. So let's assume that you don't take out 1850.30. I do think the pros will probe the short side with a stop over that number, looking to see can they get it to the lower Bollinger Band with momentum flat to lower. If they take that out, nothing turns bullish. You're just back into this weaving back and forth and going nowhere on it. The gold-silver ratio, there's a problem here. What is the problem? The industrial metals aren't getting a bid. The silver market's in a downtrend, very close to the downside target, 2106, let's call it. Momentum pointing down. The bears have control unless the market gets over 2197. And unfortunately, there's not a good sell zone in the market. You've gone sideways. Do you see the sideways pattern again? Need I remind you, Ukraine in March, the big break, and you've just drifted in this market. Very boring, bearish bias, but I don't think a lot of downside either. Excuse me there. In the copper market, they call this Dr. Copper. It tells you about industrial demand worldwide. We've all heard, oh, Beijing, Shanghai, the cities are reopening. You know, it's a lie when they tell us how many COVID cases they are. You can't take 22 million people in a city that was just locked down, Shanghai or Beijing, and tell me you're retesting the city every 3 days and you're finding 3 to 5 COVID cases. And you want me to believe that? I don't believe it. I'm not stupid. Copper's not bouncing. If things were as good as they say, industrial demand would be coming back. It isn't. And I'll give you another bothersome thing. I'm reading a story tonight that in Chile, the miners are now 50,000 of them threatening to go out on strike. Has to do with a mine that was supposed to have started up that isn't starting up. Forget the reason. 50,000 miners backing away, supply issue, and the market's not bouncing. Another bearish element. A lot of this is coming into play right now. In the platinum, if all the car manufacturers were doing well, the platinum and palladium would get some bounces because of what? Catalytic converters. No brainer there. I don't see that. Palladium market, does that look bullish to you? It's oversold. I can see it's not trying to fall. You know that back in March you peaked all the way up there and you've died. The metal markets uniformly have done the same thing, and they're just drifting, and it's there to just take a look and see. When I come to the dollar index, the pattern is bearish. You have lower highs, lower lows. However, you're over the 18-day average, so the bias is up. When the two fight each other, you have a big nothing. That becomes the bigger problem for these markets. And as I'm looking at them, trying to figure out what should you possibly be doing with them, if I can get this to run for us, it'd be fun. You probably should be paying attention to what we have in our futures trading kit. Charting software. You can get free access for a trial to my research. You can try out for free when you do this the morning subscriber videos in both the ETFs along with the futures. You get the chart patterns. They're there for you to play with. All the tools for you to work with, and then all the different courses. Cause and effect. This is a PDF download that I created when I learned what Paul Volcker was and was doing. It's as good today as the day I created it. It teaches you about money supply, how things work, where the markets run, where they go with it. I print it out and I keep those patterns by me all the time because I refer to them over and over, by the way, in the chart patterns. CME courses, the best. They got money galore. They create good courses. They try to teach you about the market. It's general. These courses are not what I teach. They're for the beginner, which is great. Teaches you a little bit about how to use options, futures, what they are, different theories behind it. Then takes you into each market and what are the nuances of them. So how do you get access? Because it's one link. We send it to you. And you download it. It goes right onto your computer. irapstein.com under free offers. Or take your cursor, move it up here. Voice is gone. I'm going to get something to drink. When we do the financial one, I hope it's stronger. I'm Ira Epstein. Have a good day.